Good, good evening, viewer. Today we have with us our Guruji, Dr. Girish Ahuja, along with us as a faculty, and the council member, Shri Raj Chawla ji, is also here, and the vice chairman of the committee, Piyush Chatterjee, is joining from the Mumbai. Viewers, as you know, that the Finance Act is passed. Now it has become the Act. So, what are the changes which has been proposed in the bill, and then what has the reality in the now Income Tax Act? So, we thought it fit that no one other than Dr. Girish Ahuja can explain each and every point so in detail. So that is why we have tried, and we thought it fit that it should be available to every member across the India and even the overseas also. Before I hand over the mic and the session to Honorable Dr. Girish Ahuja, may I request Raj Chawla ji to say a few words?
Thank you, Sanjay Bhai, Chairman, Direct Tax Committee. Now the direct tax and indirect tax both have been merged.
International, sir.
Yes, sorry, international taxation. So last year I was also vice chairman of Direct Tax Committee, and I have learned many things. And today we are very lucky that our Guruji, CA Dr. Girish Ahuja ji is with us, and we are going to learn many things from him. So I am very lucky and thankful to the Taxation Committee for giving me this opportunity. Thank you, sir.
Thank you, Raj Chawla ji. May I request Piyush Bhai to explain that how we'll move, what will be the M2M?
Right, sir. Thank you very much, Chairman, sir. The learned faculty for the day, Girish Ahuja ji, the Central Council member, Raj Chawla, all the participants, very good afternoon. As everybody knows, rightly mentioned by the Chairman, sir, that the Finance Act 22-23 has been passed. And M2M would be, there would be a session of Dr. Girish Ahuja who would take you through the provisions of Finance Act 2023. We have scheduled it up till 5:30, wherein Dr. Ahuja sir will cover up all the provisions. And last half an hour, we have kept it for the questions and answers. We have already received around more than 50 plus questions already on our panel, sir. So in last half an hour, sir, I will take you through the questions and answers. Whatever are the important, I have tried to consolidate also topic-wise wherever. And last 30 minutes, we can take 10 to 15 important questions, and we'll try to answer those questions for the benefit of all the members, all the participants who have also attended. So this would be M2M basically. And after questions and answers, there would be vote of thanks, and we'll try to complete it by 6 o'clock. So now I would request the learned faculty, sir, Chairman, sir, with your permission, will directly go to the learned faculty now to start his presentations. Welcome, sir.
Good afternoon to everyone. Sitting in front of me, of course, the chairman of the Directors Committee, and of course, Central Council member, CA Sanjay Agarwal ji, vice chairman from Mumbai, of course, CA Piyush Chatterjee ji, very energetic person sitting in front of me, of course, CA Dr. Raj Chawla ji, the secretary of the DTC, CA Mukta ji, CA, I have in front of me also CA Ajay Yadav ji, then Gaurav Kumar Shrivastava, Manoj Kumar, all are sitting in front of me, ladies and gentlemen. Let me tell you, sir, one correction I want to make. It is not a Finance Act which has been passed. Finance Bill has been passed, and it has become a Finance Act. Both of them said that the Finance Bill has passed and it has become a Finance Act. That is the correction which I wanted to make it. Now I'm coming to. I will go by section, but of course there are certain things which are not relevant, so I would not talk about that. Straight away I'll come to section 9, subsection 1, clause clause 8. You know, prior to 5th of July 2019, if you make a gift to a person outside India, whether that person was a related or unrelated person, the gift which is received outside India was not taxable under section 56, subsection 2, clause 10. The answer, why we were not taxable? You know, in case of a non-resident, only two types of incomes are taxable. Incomes received in India or deemed to be received in India, incomes accrue or arise in India or deemed to accrue or arise in India. Third income which accrue or arise outside India is not taxable in case of what you call not non-resident or not ordinary resident. Not ordinary resident, there is one clause which I'll tell you. So this non-resident said, look here, I have received this gift outside India. And when the gift is received outside India, where is the question of taxing me? You can't tell it is deemed to accrue or rise in India. Section 9(1) talks about when income is deemed to accrue or rise in India, and there is no mention about that thing. How can you tax me? Because income which is received outside India is not taxable. So in Finance Act 2019, they brought an amendment with effect from 5th of July 2019, stating that if a sum of money exceeding 50,000 was received by a person outside India, by a non-resident, received by a non-resident, that amount, if it exceeds 50,000, shall be deemed to accrue or arise in India. Chawla sahab, deemed to accrue karte hi, all person, whether you are resident or not resident, will be taxable here. So that was the person why this has been done. And Chitle sahab is also in front of me. I think he's traveling in a car, but of course he's there. So welcome, sir, Chitle sahab. So he's there also. So my point is, so though they made an amendment from 5th of July 2019, so amendment was made way back in 5th July 2019, that if you receive any money exceeding 50,000 without consideration outside India, that will be deemed to accrue or rise in India. But the question is, if it is received by a related person, it is otherwise not taxable because he is a relative. But if he is an unrelated person, now it has become taxable. After 2019, they never realized that there are chartered accountants who can read the law and find out the loophole in the law. They never talked about not ordinary resident, Chawla. In the case of a not ordinary resident, they did not mention that not ordinary resident also it will be deemed to accrue or rise in India. They just mentioned only non-resident. In case of not ordinary resident, income which accrue or rise outside India is taxable only when it is from a business set up in India or a profession controlled from India. And this income is not from a business or profession. Now, after 5 years, they have realized now that this mistake they have done. Now they have amended section 9(1)(bii)(8), saying that any sum of money exceeding 50,000 received outside India by now A, on or after 5th July 2019 by a non-resident, and B, on or after 1st April 23 by a not ordinary resident, shall be an income which is deemed to accrue or rise in India. Now, not ordinary resident will also have to pay tax, which was not mentioned earlier, mistake committed by them, nor rectified, that not ordinary resident, if they receive any income, any amount exceeding 50,000 as gift, without consideration means as gift, that will be an income which is deemed to accrue or rise in India, provided that not only resident is not a relative. If he is a relative, it is otherwise exempt. So this is the first amendment which has taken place. Next amendment. The fault lies with me about the next amendment. I remember giving them a hint that there are certain things where you have not noticed people are making a lot of money and not paying any tax. So that was what was that. I told them there is a law where it was written prior to, I would say this was done only 2-3 years back. You know, earlier, Sanjay sir, what used to happen is employers' contribution to recognized provident fund was exempt up to 12% of salary. It is right from 1961, employer contribution to recognized fund is exempt up to 12% of salary. I told them these days, CEOs, CFOs are getting salary of 3 crore, 4 crore, 5 crore, or maybe more than that also at times, or 2 crore, let's say anything. Now, they are saying their employer, please contribute 12% of salary to my provident fund. Now, when they contribute 12%, it is exempt in the hands of the employee. Secondly, when it is invested in the provident fund, the interest on that amount will also be exempt, Sanjay ji. And when he finally retires or resigns or whatever, he gets the payment back, the total amount of the contribution by the employer and interest is totally exempt. So people were getting crores of rupees at the time of retirement and they were not paying tax because they asked their employer to contribute 12% of salary. On 3 crore, 12% is 36 lakhs. Every year contributed by the employer, minimum 36 lakhs. Interest also credited to that 36 lakhs. And in years, it becomes crores of rupees. No tax was paid. Then they changed the law. They said max contribution by the employer to recognized provident fund shall be exempt up to 12% of salary or rupees 7,50,000, whichever is less. Please, the limit was put as 7,50,000, meaning thereby, if an employer contributes more than 750, the excess amount shall become taxable in the hands of the employee there and then. So therefore, that loophole was plucked. I didn't know that I committed a mistake or I advised them, whatever is it is my mistake. Then they realized after 2 years, employees are contributing to provident fund, recognized provident fund, sir. And they have money. They are getting a lot of salary. They say, instead of putting anywhere, let me put 5 lakh, 10 lakh, 20 lakh to my recognized provident fund every year. Contribution is compulsory, but you want to contribute more than what is minimum required. Let's say I've contributed 10 lakh rupees. The purpose was not 80C 1,50,000 exemption. The purpose was the interest on this recognized provident fund will be exempt every year. And when he finally retires, he gets the full amount back without paying any tax on the interest part. So they realized this mistake we have done. And then they amended that employees' contribution to recognized provident fund shall be exempt up to 2,50,000. And if he contributes more than 2,50,000, what are they saying? The amount exceeding 2,50,000, whatever the interest they get at the time of retirement of an amount exceeding 2,50,000, that will become taxable. Earlier, it was not there. So now there is no point putting 2,50,000, more than 250 in a recognized provident fund by the employee because he knows that it is going to be taxed in his hand. And what is the use? Why not invest some other place where it is? So that was the second point. Third, they realized in 2021, what happened? Unit-linked insurance plan. Sir Chawla sir, people were contributing to unit-linked insurance plan and they used to amount, they were not interested in that 1,50,000 ATC. They have money. So Chawla sir has a lot of money. He said, let me invest in unit-linked insurance plan. They amount 10 lakh rupees every year, 20 lakh rupees a year, 30 lakh rupees. Purpose is that I will get whatever interest or bonus I get at the time of maturity of this, it will be totally exempt in my hand. Am I right? Totally exempt in my hand. So they checked the loophole and they said any policy issued on or after 1/4/2021, any policy after 21, if the policy is taken for more than 2,50,000, the entire amount will become taxable when it is received back on the time of maturity. Clear, sir? Now, lately, they have come to know people are depositing a lot of money in life insurance. The purpose is not only life insurance, Chawla sir. The purpose is that whatever interest or growth I have in this life insurance or bonus I get after time of maturity or at the time of death, that will become totally exempt. Under section 10, clause 10D, it is totally exempt. Sir Sanjay ji, I'm right? So now they realize this is also a mistake they have committed. Now they have said, if you take a life insurance policy, please note, on or after 1st April 2023, on or after 23, and the policy amount, premium paid in any of the previous year, exceeds rupees 5 lakh, then please note, at the time of maturity, whatever amount you get, that will become taxed under section 56 of section 2, clause 30. Only deduction will be the premium so paid by you till date. So total consideration minus premium paid will become taxable under the other sources because you have taken a policy of an amount exceeding 5 lakh. Now the question came, suppose after 1/4/2023, Sanjay ji, I took a policy of 2 lakh. First policy 2 lakh. After 1 year, I took another policy of 2 lakh. Total is 4 lakh for 2 policies. No problem. It is less than 5 lakh. No problem. Then after 1 year, I take another policy. 2 plus 2, let's say I take a policy of 1 lakh. Still it is 5 lakh. No problem. But suppose I take the third policy for 1,50,000 per year. So how much it comes to now? 2 plus 2 plus 1.5, 550. So in this case, the first 2 policy of 2 plus 2 will be exempt. Whenever the payment is received, it will be exempt. But the third policy which you have taken, and due to which the premium has gone beyond 5 lakh, that 1.50 lakh will become taxable whenever you receive the payment under section 56 subsection 2 clause 13. Total amount minus the amount received, it will become taxable. Clear, sir? I have said you may take more than one policy, I have no problem. But for a policy amount where it crosses 5 lakh, that policy will become taxable. Clear, sir? This is section 10 clause 10D. However, that point is still maintained that if you get the payment if the amount received by the legal year after the death of the insured, obviously it will be exempt, even if the policy is for more than 5 lakh. No problem. And if you receive after the death, it is going to be exempt. But if you receive during the lifetime, and I told them, sir, if I take a policy of 10 years, maximum policy I will be able to take only for 50,000 now. Because 10 year, 5 lakh, 10 year, 50,000, and not more than that. But they say, why do you take 10 years? Take longer period. I said 20 years. Then also 1 crore only. And these days, nothing much. But they want to say, after the death, if it is received, we are not saying anything. But if during the, if we receive anything before his death, that becomes taxable. But please note, they are not touched the old policies. That old policy, whatever premium you are paying, that is not covered under this one. It is only new policies. That's why you must have seen many advertisements given by the insurance company. Take policy before 1st April 2023. There will be no problem. It will remain exempt under section 1010T. But now any policy which is taken on or after 1/4/23, kindly note, unless it is whole time policy, means whole life policy, where you receive the payment, only nominee receive the payment, it will become taxable if the premium paid in any of the previous year exceeds rupees 5 lakh. Clear, sir? The purpose was exemption they were taking by investing more money. Clear, sir? This is 1010T. Another thing, very small, but you must know, because we are all chartered accountant, we are expected to know everything. I don't know. They want us to know everything, whatever is there, A to Z, what is there in income tax. And one is Agniveer. You know, Chawla ji, now there are Agniveer are being appointed for a period of 4 years. There is a system of provident fund in the case of Agniveer. There is no system of pension trust in the case of Agniveer. They have come out with Agniveer Corpus Trust or Corpus Fund. Agniveer Corpus Fund. So, Chawla ji, the employer contribute to Agniveer Corpus Fund. The employee will also, who is employer? Central government. Central government will contribute to Agniveer Corpus Fund, and also the employee, that is the person who is Agniveer, will also contribute to the what we call Agniveer Corpus Fund. The question is, when the employer is contributing to Agniveer Corpus Fund, first point is that amount which he has contributed, the employer, the central government has contributed, included in the salary. It will function 80CCH deduction. If we have an employee has contributed to Agniveer Corpus Fund, whatever the employer has contributed shall be allowed as deduction to Agniveer. And whatever the employee has contributed, that the Agniveer has contributed, shall also be eligible for deduction under 80CCH. Sir, this is from assessment year 23-24, not assessment year 24-25. 23-24, the employer contribution first will be added to the salary. Thereafter, under 80CCH, the deduction will be allowed. And second is the employee contribution will also be allowed as deduction under 80CCH. Question now, please note, even if you are in the new regime, you know the new regime under 115 BAC, where you are not allowed any exemption or deduction. Many exemption reductions are not allowed. There are no deduction allowed under Chapter 6A. But they have clearly said that even if the Agniveer of going for a new regime, please note deduction under 80 CCH shall be allowed, both for employer contribution as well as employee contribution. That exception they have provided, that nothing to worry. You are in the oldest regime or you are in the new regime. Even if you are in the new regime, kindly note Agniveer will get the benefit of deduction of both employer contribution and employee contribution under Section 80 CCH. Clear, sir? Just you shake your head. I feel very comfortable that you have been able to get through it. One section was the news agencies' income, which was exempt if they are notified. That 1022B has been omitted. So now news agencies' income will be taxable. Nothing to do with it. Coming to that, I normally do amendment in the trust or trust and educational institution, etc. at the end. Now it is up to you. If you want me to do at the end, you will have to remind me because it is very complicated. I will certainly do it. But if you want me to do it right now, I can do it. But right now, I want to make it interesting. And after 1 hour, you can take up, you can talk to me. I'll talk about 10, 23, C, 11, 12, and 13. But you will have to remind me, Sir Hajar sir, because
Yes, sir.
normally when I'm in a flow, I forget
Right, sir.
to do it. And people think that I want to escape from this. Absolutely not a problem. I'll tell everything. Coming to the next. A Supreme Court judgment came about Sikkimese individual who are Sikkimese. They are getting full exemption of any income which they earn in Sikkim or any interest or dividend income which they have earned in India. They are not liable to pay tax under Section 10 Clause 26 AAA. Sanjay ji, very interesting. What was written there is that if there is a Sikkimese woman who has married to a non-Sikkimese on or after 2008, 1/10/2008, then this benefit will not go to Sikkimese women. This was the point which was there when this Section 1026 AAA. Supreme Court recently said this is unconstitutional. Why are you stopping a woman who has got married to a non-Sikkimese, but she is a Sikkimese? Why are you stopping them to not to take an exemption? So therefore, this is in the notice to the amendment, government amendment, they have changed 1026 AAA. And whatever definition was there for a Sikkimese, they've added two more things which will clearly indicate that if you are a domiciled before 75 of the Sikkim, or you are not domiciled before you are not domiciled after 75, no problem, whether it is individual or woman, they will get the benefit if his parents or her parents or grandparents or her brother, real brother, are the benefit from Sikkimese. So definition has been changed. Now woman has no problem of getting married to a non-Sikkimese. So this is an indication I'm giving to you that there is a possibility of marrying a Sikkimese woman and you get the exemption there. The Sikkimese woman will get the exemption even if she gets married. Okay, sir. This is the reason, because of Supreme Court judgment, they have changed the Section 1026 AAA. Next change, sir. Very interesting, sir. Sanjay ji, a Supreme Court judgment came of Ahmedabad Urban Development Authority. This is a very important judgment. Two judgments have given by Mr. Ravinder Bhatt of Supreme Court judge. One is relating to 1023C, educational and medical institutions, and another is that was a New Noble Educational Society. I'm not talking about that. I'm talking about Ahmedabad Urban Development Authority. Now, what really happened is there is a definition of charitable purpose given under Section 2, Clause 15. Section 2, Clause 15 states that charitable purpose includes relief to the poor, number 1. Number 2, education. Number 3, yoga. Number 4, medical relief. Number 5, preservation of environment, watershed, forest, wildlife. Number 6, preservation of monument or other places. And last limb is advancement of any other object of general public utility. I feel very happy. I've seen Sanjay ji repeating that. His lips moment was there. So I could understand that he's also following. So Sanjay ji, seventh was advancement of any other object of general public utility. And there are two provisos given under them. Provided that advancement of any other object of general public utility shall not be called a charitable purpose if it involves an activity of carrying on any trade, commerce or business, or rendering service to any trade, commerce or business. Right, sir? This is proviso 1. Then second proviso had further provided further that above proviso will not be applicable if the receipt from this commercial activity do not exceed 20% of the total receipt. Am I right, sir? 20% of the total receipt, but this was only for 7th limit, advancement of any other object of general public utility. The earlier 6 could do any business. There is no problem provided that business is incidental to the attainment of the objective of the trust. But to them, they said nothing doing. You are getting, and these are the development authorities, sir, Ahmedabad Development, or in Delhi Development, in Maharashtra Development Authority, in Punjab HUDCO, and in Haryana HUDCO, Haryana Urban Development Authority. Everywhere you have development authority. Aurangabad Development Authority, such and such development authority. They are saying they are selling, they are aggregating the land and selling the land and making huge amount of profit. Since they are making huge amount of profit, their activities are commercial activity. Their income should be taxed. This is what he said. If they add only, if they have small markup to the cost, we have no problem. If the markup is only very reasonable margin, I don't mind. But they are making huge amount of profit. Now the government has to see whether to tax them or not. This was the given. Now the CBDT has come to the rescue of all these development authorities. Sir, Piyush ji, they have come to the rescue. They had earlier one section 10 clause 46, but 1046 very clearly says income of a body or authority or institute or a trust is exempt, provided it is notified by the central government and it is not for commercial activity. So 1046 was not suitable. So they have now brought one more clause, section 10 clause 46A. Sir, 10 clause 46A, which says any income, please note the word, any income of a body or authority or a trust or institution or any, by whatever record, please note, established by the central government or state government for the following purposes shall be exempt if it is notified by the central government. That if the central government notifies it, the income of this development authority is going to be exempt, provided that development authority is established by central government or state government and it is for the following purpose. What are the purposes? The purpose mentioned is if that the authority is dealing with and satisfying the needs of housing accommodation. If that authority by businesses dealing with and satisfying the need of housing accommodation. Second purpose was planning, development or improvement of any city, town or villages. If that authority is in the business of planning of development or improvement of any city, town or villages. Or third is regulating and developing any activity in which there is a public interest. And last is regulating any matter relating to public interest. So if these are the four purposes, the authority is constituted. Now, please, all chartered accountants, I'm tell those authority, the form is going to come to apply for a notification under section 10 clause 46A, wherein it is for the following purposes. They will be notified by the central government under section 1046A, and thereby any amount of profit they earn, because any income that will be totally exempt, provided it is established by central government or state government. Clear, sir? So this is a very important amendment, and many chartered accountants are doing work for them. Please advise your client, those who are development authorities established by central state government to apply afresh so that their income may be taken as exempt. Otherwise, they will be caught in that the judgment of Ahmedabad Urban Development Authority. Clear, sir? This is section 10, 46A. 46B, they have recently added credit guarantee fund or institution or private limited company. Nothing to do with us. I'm not talking about that. You know, section 10AA, sir, special economic zone. Sir Sanjay ji, it has been there for ages. And there is a sunset clause also now. After 21, you cannot have any exemption under 10AA if you establish. But the earlier exemption is 5 year, the next 5 year 50%, and next 5 year, if you create a reserve for 5 year also, 15-year total exemption. But nowhere it was mentioned, Sanjay ji, for so many years. Now it is already a sunset that the return of the income must be furnished on or before the due date mentioned under 139(1). So this year they have said no deduction will be allowed under section 10AA unless that unit file its returns of income on or before the due date mentioned under 139(1). And second, when they are making export, there was no requirement of bringing that money in a convertible foreign exchange within a specified time. Now they have put that if there is export, the sale proceeds of export must be brought to in India within 6 months. Within 6 months. Earlier that condition was not there. So those two conditions have been changed in 10AA. Very few people are covered under 10AA because almost sunset is there. But already company who are availing this benefit can go to benefit up to 10 years or maybe 15 years. That's why the change has come. Next change, sir. Section, I don't want to talk about something like 17 section. Sanjay ji, so far we are having valuation of rent-free accommodation and concession in the matter of rent, and there are many provisos given under section rule. They say we will come out with a new rule. We will come out with a new rule of valuation of rent-free accommodation and valuation of rent house given at a concessional fee. Whenever it comes, you will come to know. So far, the rules have not been framed. Sir, this is the another point. Coming to now. You remember Sanjay ji 194R read with 28(4). They came out that if you give any benefit or perquisite, which is arising from business or exercise of profession, that benefit or perquisite is going to be taxed in the hands of the recipient who is carrying on a business. And you know, many people are giving benefit. This also started from doctors. I don't want to go beyond that. Otherwise, I'll be put into difficulties. Doctors were getting a lot of benefit or perquisite for recommending the medicines. And you all know that. I don't want to commit to that. But now they have said that if you are carrying on a business or a profession, and if there is anything which you receive as a benefit or perquisite, it is taxable. But taxable was under 28(4). IV, 28 IV, under the head profit or gain from business or profession. And they said, it is already there. It is nothing new. 28(4) was not there. But there was no tax to deduct it at source. So people who are receiving this benefit or perquisite are not showing income. Although 3CD is also there, you have to show that. But they never used to tell us that somebody has got car free, somebody has got fridge free, somebody has got AC free because he has completed a target and he has been given a benefit. Somebody has been taken to Singapore for a holiday trip or something like that. They were taking it. Now they have said TDS will be deducted. After doing that, they came out with the what you call law in the guidelines that look here, the value of benefit or perquisite in section 28(4) written is whether convertible into money or not. The section 28(4) says value of benefit or perquisite whether convertible in money or not arising from business, exercise or profession shall become taxable. But the judgment of Mahindra and Mahindra were there, Sir Sanjay ji, where it was written that look here, that benefit should be in kind before it can be taxed under 28(4). And if the benefit is given, Sanjay is showing like this, when the benefit is given in money, you can understand sign language. If the benefit is given in money, then it was not taxable as per Mahindra and Mahindra judgment. Now they wanted to check it. They know that they have given the guidelines, they have crossed the limit. But 28(4) talks about something else. Later on, there may be a dispute. So they have now amended section 28 IV, saying that value of benefit or perquisite arising from business or exercise of profession. Now two clauses: A, whether convertible into money or not, or B, whether received in kind or cash, or whether in kind or whether in cash shall become taxable. Are you getting my point, sir? Earlier it was only in kind. That means Mahindra and Mahindra case gone. That means if it is given benefit in money, that also becomes taxable. Then I was giving a lecture and very senior persons from Big Four were sitting there. Sir, that means that waiver of a loan by the bank will also become taxable, because Mahindra and Mahindra was only this. Waiver of a loan by bank will also taxable because it is the benefit given in money. It will become taxable. I said certainly it will become taxable. But please note, there was a question 1 added in the guidelines, second guidelines, where they said that if that waiver has been given by the following financial institution, waiver is given by the following financial institution, then it will not be taxable under 28(4), but normal provisions will be applicable. What was the normal provision? If that waiver is for term loan, it is not taxable. If the waiver is of a CC loan, cash credit loan, then it will become taxable because of the judgments of the various court. So since that is already there, there is nothing to worry that Mahindra gone. But if it is my personal loan, that is a different issue. But if there is a waiver of loan of the bank or financial institution, absolutely nothing to worry, because we have that question where exemption has been provided. Clear, sir? So this is 28(4). Sorry, I have not switched off my phone. I'm very sorry. Let me do it. Sorry, sir. So 28(4) amended, and explanation 2 has been inserted where? Under section 194R, stating that whether it is benefit in kind or in cash or partly in kind or partly in cash, they will all be taxable and liable for TDS under section 194R. Clear, sir? This is what was required, and we have put. Next point. Next point. I don't want to take much time in 35D, wasting my time. I'm coming to 43B. Sanjay ji, very interesting situation. Or Piyush, you have to listen to that, very interesting situation. We already have a micro, small and medium enterprise development act 2005. It is there. According to that act, what really is that if you are buying any goods or services from any what you call micro enterprise or a small enterprise, if you buy goods, you have to make the payment of that goods or services to that micro small enterprise within a period of 15 days. Please, 15 days. But you can enter into an agreement that or a credit terms, but that will be maximum 45 days. So meaning thereby, if there is agreement, Sanjay ji, you have to make payment within a maximum period of 45 days, whatever is the term of agreement, otherwise 15 days. Now, as per that act, if the payment was not made within the 15 days or 45 days, as the case may be, you had to pay interest 3 times of the bank rate. Sir, it is already there, but it is not in income tax. It is already there in that act. And in income tax, it was said, this interest will not be allowed as deduction. This interest will not be allowed as deduction. Meaning thereby, this law is already there, that if you buy any goods or services, service also, from a micro or small enterprise, micro turnover is up to 5 crore or small turnover is up to 50 crore. If you buy goods or services from them, please note, you will have to enter into an agreement for credit terms, maximum 45 days. You can't enter more than, or if you don't enter into agreement, 15 days. Now the question is, still the problem was there. So they have brought 143B. And 43B section. What is the language written? Any sum payable by a person to any micro or small enterprise beyond the due date specified under section 15 of the Micro, Small and Medium Enterprise Development Act 2005 shall be allowed as deduction only in the previous year in which the payment is made. So therefore, every chartered accountant who are preparing Form 3CD tax report will have to ask the client, please provide me the amount payable to micro or small enterprise. I'm not talking medium, micro and small enterprise. If there is an amount which is due to micro and small enterprise on 31st March, then you will ask him, when was the supply made? If the supply was made maybe in January, February, and period of 45 days has already lapsed, so this amount will not be allowed the deduction. When will it be allowed? In the year, means in the year when the payment is made, maybe next year or maybe later than next year. Clear, sir, Sanjay? Sir? But suppose on 28th March, you have provided, supplied the goods, 28th March. 15 days will be over after about 12th April, or maybe 45 days will be over in the month of May. But 31st March, it is due. So you will have to verify whether the payment is made within 15 days of the due supply of goods or 45 days, although it is due on 31st March. But if it is paid within 15 or 45 days, please note 15% of the date of supply, of the date of providing services. Please note it will be allowed on accrual basis, but if the payment is made beyond that time, it will be allowed in the previous year when it is paid. Sir, I told them, PUC, I told them, look here, I am a person, I am a company, any person, company or anything. I have a turnover of any amount, but I am showing my income of 30 lakh per year. My income is 30 lakh. Suppose I have bought goods worth 1 crore 50 lakh from a micro enterprise or small enterprise, 1 crore 50 lakh. And I am not able to make the payment within 15 days or 45 days. What really happens, Sanjay ji? That 150 will be disallowed in the current year. It will not be allowed on due basis. So that means my income will be 30 lakh plus 1 crore 50 lakh, 1 crore 80 lakh. I'm right, sir? I will have to pay tax on 1 crore 80 lakh, whereas I'm showing my income 30 lakh, where from I will get the amount to pay the money for 1 crore 50 lakh. Suppose I have paid some or other. Next year, I made the payment. Next year, my income is also 30 lakh. But now I have to claim a reduction of 150. So meaning thereby, there will be a net loss of 120. Am I right, sir, Sanjay ji? 1 crore 20 lakh, which I'll have to carry forward. And I may get the benefit only within 8 years. So my point is, I am a small man. I am earning, showing my income. And because of one mistake I committed, maybe 1 day, maybe 10 days, maybe 15 days, my whole amount has been added to my income and I have to pay tax here. And I have to make the payment, or I have to claim the deduction only in the subsequent year when the payment is made. Probably DTC also had represented before the department, but they have not listened to that. I can't help it. I also mentioned to them, please take care of this. It will be very difficult for a person. Or now, even inform the micro small enterprise, please, if you are registered, give us the registration certificate. Then only you will register. And even chartered accountant will have to see whether it has been done or not. Clear, sir? So this is 43B, which I wanted to tell you, little harsh. Coming to two types of presumptive tax where people feel very happy. And I am always very unhappy. This is 44AD and 44ADA. In the case of 44AD, you have to presume your income to be 8% or 6%, depending upon whether you made the payment by account, paycheck or not. Otherwise, 8%, provided your turnover does not exceed 2 crore rupees. So you presume your income to be minimum 8 or maximum minimum 8 or 6%, like the case may be. Chawla ji, let me tell you. I mean, Chawla is in front of me, so I was mentioning him. Chawla ji, let me tell you. This is, people are mistaken. It is a myth. They say, you have to show 8% or 6%. Acha, there is Mr. Chawla, Raj Chawla, Mr. Subhash Chawla is also there. That's why Chawla ji immediately came up. But I'm talking about not Chawla, Mr. Subhash Chawla, I'm mentioning. So what really happened is, people think it is for the benefit of the assessee. No, sir. 44AD and 44ADA is not for the benefit of assessee. It is for the benefit of the department. Why? If your income, you show your income less than 6% or 8%, you have to get your account, you have to maintain your account, and get your accounts audited, sir, Piyushji. And if your income is more than 8 or 6, you have to show more income. It's not that you cannot show, you have to show only 8% or 6%. This is a myth. This is a mistake people are committing. Even chartered accountants are committing mistake. They say we show our income to be 50%, although we are earning 80% of our gross receipt. No, sir. Chawlaji, I am warning you. Don't show 50% and then earning income of 80%. Not allowed. If you are earning income of 80%, you will have to show 80, not 50%. Mind it. If it is 80, it is going to be 80, not 50. This is wrong, mistake. People are thinking. Now, what have they said? The 2 crore limit has been raised to 3 crore.
Participants,
I
please.
think,
I think
yeah.
so. He has wrongly exited. We will connect them so he can rejoin. Mukta, please do that.
अब तक पीयूष भाई कुछ आप ही जो इसका वो है थोड़ा सा डिस्कस कर लीजिए, because you are also an expert person. Please.
No, I think so. He should wait. I can discuss that obviously, but he's continuing his flow, so there shouldn't be any difference on that. That's why I thought I will just.
He's coming in half a minute.
He's coming in half a minute, but there are a lot of questions come up, Rajbhai, already, and on this important issues. Obviously, a lot of questions he has already answered. Maximum on 1010D LIC premium, whether it should be aggregate, what happens to the old policies, what happens to the new policies. But he has already, right? Somebody is asking whether it would be proportionate in his examples. So people are listening his examples and they have already read questions based on those examples. So it's really the participants are quite enthusiastic, which I am feeling. उन्होंने जो 1,50,000 4 lakhs का example दिया, they have already issued questions on that. So.
And we have more than 7,000.
Yeah, sir, you are mute. Ahuja sir, you are mute. Please unmute.
Sir, extremely sorry, I forgot to put charger. That's what the problem that it was switched off. Now it is okay.
Sir. Go ahead, sir.
I'm very sorry. It is my mistake. I should have put it on the charging, but I didn't put it the laptop. You know that what really happened. Now coming back. So they have said if you are out of the total receipt, not more than 5% money is received by cash or not more than that, then the limit has been raised from 2 crore to 3 crore. And in the case of chartered accountant professionals, whether under 44AA, that is under 44 ADA, the limit of 50 lakh, which will be raised to gross receipt of 50 lakh has been raised to 75 lakh. So that if you want your total, the gross receipt does not exceed 75 lakh, show your income to be 37 lakh 50,000 minimum. Please note 37 lakh 50,000 minimum. We know our chartered account, we don't get money more than 5% in cash. We are normally getting money only by check or by RTGS. So our is not a problem. But minimum income should be 50 if you don't want to maintain books of account. And if you have income more than 50, kindly note it is not 50. You will have to show more than 50. Minded more than 50. It is wrong if you say that let us show 50 and earn 80. That is not possible. ये तो सर उनके लिए था जो ट्यूशन क्लासेस हैं, ये वो जो गई bogus, whatever the people are showing bogus income, tuition classes, you know what you call cookery classes, or beauty parlor. Everyone knows we don't have so many beauties. The income from beauty parlor is much more than the beauties here in India. And people were showing income that what is that purpose. The purpose was wrong. Otherwise, genuinely, it is very difficult to make out an income of 6% or 8% in a turnover of 2 crore. Let me tell you. Net profit, all expenses. And even a chartered accountant, cannot earn so much of money, 50%. So he has so much of establishment expense and so other thing that if he has to show 50%, he has to, to avoid maintaining books of account, he has to show income. Otherwise, I don't think it is for benefit to us, but whatever is it is benefit to the doctors mainly, who gets money in cash only. And they can show that income earned is 75 lakh and they can show 37 lakh 50,000. Ours is all payment given in what you call, you all know that We get all, we have GST, and doctors don't have GST. Lawyers don't have GST problem. We have a GST problem. We have to raise the bill. And if we are raising a bill, where is the question of that? But whatever is it, 50 raised to 75, 2 crore raised to 3 crore, provided not more than 5% of the total receipt should be in a mode other than account pay check or electronic mode. Clear, sir? This is the another point which I want to tell you under 44 AD, 44 ADA. Small point in 44B, double B, a triple B, I don't want to do is nothing. Coming to next one. A new concept has come, sir, Sanjay ji. You know, you can have your physical gold converted into electronic gold receipt. It is dematerialization of gold into electronic gold receipt. This is being done these days. Bombay Stock Exchange has already started this trading on gold receipt demat. So you can convert your physical gold by giving it to the vault manager approved by the SEBI. Give your physical gold. He will give you electronic gold receipt. Now you can trade that electronic gold receipt on the stock exchange and you make profit under capital gain. Look here. Now when you're converting the physical gold into electronic gold receipt, basically it is a transfer. It is a transfer. But they have put section 47 clause 7D stating that conversion of physical gold into electronic gold receipt will not be a transfer. Similarly, reconverting the gold receipt into physical gold will also be not regarded as transfer. Clear, sir? First point, that if you convert your physical gold into gold receipt, it is not a transfer. If you reconvert your physical electronic gold receipt into, it's not a transfer. Now you are trading. Suppose I had 1 kilo gold, I converted into electronic gold receipt. Now I'm trading on that. When I sell that, suppose I sell that gold receipt and by chance on a stock exchange, Sanjay ji has bought that electronic gold receipt. The question will come, I will have to calculate capital gain because I've sold this to Sanjay ji, electronic gold receipt, capital gain. What is my cost? Electronic gold receipt is no cost. I have converted into from physical gold. So law says section 4910, the cost of the electronic gold receipt shall be the cost of the physical gold which was converted into electronic gold receipt. Clear, sir? So if I have converted the physical gold into electronic gold receipt and I am selling this gold receipt to the stock exchange to Sanjay ji, my cost will be cost of the physical gold for which I have sold electronic gold receipt. Now the question is period of holding. Will it be a short-term capital gain or a long-term capital gain? He says, look here, not only the current period of electronic gold receipt, even the period for which I had held the gold, physical gold will also be considered for calculating long-term capital gain or short-term capital. Suppose I had gold for 5 years old, I have converted into, and I have sold this gold receipt after 2 months. So my period will be 5 years, 2 months. I have to add the period of the physical gold also. This is section 2 clause 42A, include that period. Now I have sold, sir, gold to Sanjay Agarwal gold, electronic gold receipt. Sanjay Agarwal ji has sold that electronic gold receipt through stock exchange to Mr. Piyush Shahjar, his vice chairman. He has purchased from stock exchange from Sanjay Agarwal. Now Sanjay Agarwal purchased from me. So he knows his cost. He knows his cost. So cost will be there. He knows his period of holding. And he will calculate capital gain, which will be short or long. And his cost will be that. But whenever I convert this electronic gold receipt into physical gold, at that time, it is not a transfer. So my point is original conversion will take the previous year period also, gold period. But the afterwards, you know what is the period of holding. Sanjay is bought on 16th of July to, let's say, 5th of April 2023. He wants to sell it to you after 1 year. Period of holding is 1 year. So my point is he purchased, but when I got it done, my case, I got it done on 1st April, but I had the gold also, which I was holding for more than 5 years. So my period of holding will be, we will include the period of holding of the gold also, which was converted into electronic gold receipt. Clear, sir? This is one point which I wanted to tell you. Next point. 50AA was brought earlier for market-linked debenture. Market-linked debenture does not have a fixed rate of interest. That is underlying asset that keep on changing. So they wanted to say, in the case of market-linked debenture, they said the cost, the period of holding, it will always be a short-term capital asset. Irrespective of the period of holding, the market-linked debenture will have a short-term capital asset, and whenever there is a gain, it will be a short-term capital gain. Clear, sir? This was brought in the finance bill. Now, in the government amendment, very wonderful thing has come. Unit of a specified mutual fund. We used to invest in debt fund. And debt fund, after 3 years, we were claiming it as a long-term capital gain, and we were getting the benefit of indexation also. In the case of mutual fund, sir, Sanjay ji, we were getting the benefit of indexation or not. Now they said, look here, if there is a unit of a specified mutual fund, it will always be short-term capital asset if that mutual fund, if that specified unit is acquired on or after 1st April 23. I'm not talking about the old one. If you have acquired a unit of a specified mutual fund on or after 1/4/23, kindly note, whatever period you hold, it will always be short-term capital asset like market-linked debenture. Then they have defined specified mutual fund. They say unit of a specified mutual fund means that mutual fund where the investment in equity shares of domestic company is not more than 35% of the total investment. 35. Means up to 35, it is what you call specified mutual fund. If they invested more than 35, then it will come under normal procedure. Clear, sir? Clear, sir? So those mutual fund units where the mutual fund have invested not more than 35% in the equity of the domestic company, they will be called as unit of specified mutual fund. And in their case, it will always be a short-term capital gain. And that's why, Sanjay ji, lot of advertisement came and lot of brokers told us, kindly buy unit of mutual fund by 31st March, debt fund, by 31st March. Because it is, if acquired after 1st April, then only there is a problem. If I have acquired up to 31st March, the same old rule applies that more than 3 years, you get indexation benefit and everything. But now please note, if the unit of a specified mutual fund where the investment is not more than 35% in the equity, there in case it will always be a short-term capital gain. There is no question of any long-term capital gain. Clear, sir? This is 50AA. Earlier it was market-linked debenture which were brought in finance bill. In the government amendment, even unit of specified mutual fund has been inserted, provided they are issued on or after 1st April 2023. I'm not talking about the old one. Coming next, very interesting people. People were claiming, sir, PUG, interest on money borrowed for housing, for house property, was claiming reduction under 24B. You know that it is allowed under 24B, interest on money borrowed. And sometimes it is allowed under 80C also some deductions. People were taking benefit under 24B, benefit under Chapter 6A. But when they were selling that house property, they were claiming the benefit of that interest as well as of the deduction in cost of acquisition. Under Section 48, cost of acquisition. They said, look here, what are you doing? This is once you have claimed deduction under 24B, or you have claimed deduction 80, what you call Chapter 6A, kindly note that amount for which you have claimed deduction will not be part of the cost of acquisition. Clear, sir? 48 section amended, although it is a law, but people were still doing a lot of wrong things. Now they have to be careful about that. They cannot do it. Next point, very interesting.
गुरुजी एक इसमें बड़ा इश्यू आया है कि जो पास में क्लेम कर चुके हैं, what will happen to that?
Sir, when they have made it effective from this year, they will have to ignore it because they know it will be very difficult to trace that. Difficult to trace that. That's why they have done it from this year. But although logically it was not allowed earlier also. Logically it was not allowed earlier. But now whatever has happened, when I come to trust, I tell you many things. When the money is borrowed as a loan, people were taking exemption for that also. But that point is there. Now they want to close that chapter. They don't want to open the old cases. That's why they might have said, let us do it for future. Let us forget what have we done in the past. But clear cut is, this is from assessment year 24-25. It is not from earlier. Next point, sir. You must have seen many people, particularly since Piyush is sitting. He comes from a city, the capital market or capital city of the country. There people were buying houses or flats for 30 crores, 40 crores, 50 crores, 20 crores, and they were not paying tax. They were doing double planning. I'll tell you what kind of the planning was there. They were selling some asset and making profit and investing that consideration price and for a residential house. We have section 54 of Sir Sanjay Ji, which says any long-term capital gain arising from the transfer of any capital asset other than residential house property shall be exempt. Now the word is proportionate to the net consideration price so invested in the purchase of a residential house property within 1 year before or 2 years after, or construction of a house property within a period of 3 years, provided that the new house property purchased or constructed should not be transferred within a period of 3 years. Yes, sir. So what were they doing? Suppose they have an asset whose index cost is, let's say, 5 crore. Sir, try to listen. Index cost 5 crore. Sold for that asset for 20 crore. I'm taking 20, I will take 30 also. Now, if you invest the entire 20 crore, you are getting a benefit of capital gain of 15 crore. Am I right, sir? 5 crore is the index cost, consideration price 20, long-term capital gain 50. The law is, if you invest the full consideration price, that is 20 crore, you get the full benefit of capital gain 15 crore. But if you invest 15 crore, the benefit was long-term capital gain into amount invested divided by net consideration, which will be 5 crore into 15 crore divided by 20 crore. If you invest 12 crore, 5 into 12 by 20. If you invest 18 crore, 5 into 18 by 20. Now the people were making money. Suppose they have sold it and they have earned a capital gain of 30 crore. Now they used to keep that house for a period of 3 years, sir, because otherwise the exemption will be withdrawn. After 3 years, they used to sell that house. Piyush ji, suppose I have bought the house for 30 crore, I sold it for 50 crore or let's say 45 crore. When I sell it, I'm making a benefit of 54 now. Selling a residential property, buying another house property. But you have to invest only capital gain. Here it is not the consideration price. Suppose my index cost of 36 crore and sold for 50 crore. What was the amount? 14 crore. So 36 crore you are already taking home. After keeping it for 3 years, you are taking home 36 crore and not paying any tax. And that 14 crore you bought a new house and don't pay tax. Am I right, sir? Now they say people are doing that. Now they have said, please note, the formula is long-term capital gain into amount invested by net consideration price. The change will be amount invested cannot exceed 10 crore. Suppose the capital gain is 15 crore. Am I right? And the consideration price was 20 crore. Earlier, I used to say 15 into 20 by 20. If I invested 15 into 18 by 20. Now, you invest 20 crore. It will be 15 into 10 by 20. The amount invested will not be more than 10 crore. If it is less than 10 crore, I have no problem. But amount invested cannot be more than 10 crore. Meaning thereby, even if I have invested that 20 crore, the formula says long-term capital gain 15 multiplied by 10 divided by 20. If I invest 16 crore, same long-term capital gain into 10 crore divided by net consideration price. Piyush ji is little unhappy about it. He is noting down. Whenever the question comes, he will definitely ask me, what kind of a thing is this? Definitely. I give you another example because I know he's noting down. I'm very happy. At least he's listening each and everything and making a point of it. Please, Sanjay ji, let me tell you. Index cost 10 crore of the shares I've sold, 10 crore. sold for 40 crore. How much capital gain? 30 crore, sir. I have invested the whole 40 crore in this purchase of property. How much exemption? 30 crore. Correct? But look here now. If I invest 40 crore, my exemption will be 13 to 10 by 40. 13 to 10 by 40. If I invest 30 crore, 13 to 30 by 40 nahi hoga. 13 to 10 by 40. If I invest 20 crore, 13 to 20 by 40. If I invest 10 crore, 13 to 10 by 40. If I invest 8 crore, 13 to 8 by 40. Still, Piyush is not very happy. Okay, we will discuss this when the question and answer comes. It is cost of the amount invested. Similar treatment has been done under 54. Whatever the capital gain you earn, you could invest that amount and take the full exemption by buying a new house, by buying another house, or constructing a new house. Now they have said exemption will be allowed of the capital gain under 54 for a maximum of 10 crore. Maximum of 10 crore. But this is property wise, not individual wise. You sell one property, get 10. You sell second property, get 10. You sell third property, here Piyush is very happy. Here he is happy. But 54F, he is not very clear. We will come to that. Okay. So this is 54 and 54F. Now, sir, we had one judgment of BC Srinivasa Shetty, Sanjay ji, where it was held that if there is a self-generating asset and if the cost cannot be determined, the computation provision fails and there will be no capital gain. Remember? Now, thereafter, they brought that self-generated asset as goodwill of a business or profession, right to carry on a business or profession, right to a patent, copyright, brand name, trade name, right to license, franchise, etc. They said if they are self-generated, the cost will be nil. Now, suddenly they realized in one judgment that there may be any other which they have not specified. And if that right has not been mentioned, they will say it is self-generated, it will not. And there may be some intangible asset which they have not visualized it. And that they may say this is not taxable. So now what have they done? Besides, especially mentioned, they say any other intangible asset or any other right which is self-generated, the cost of acquisition of that right or intangible asset shall be nil, meaning thereby taxable capital gain. Clear, sir? Now nothing has been left. You left to imagination. Any kind of right, any kind of asset is not mentioned will also be covered under this, and the cost of acquisition of that intangible asset not mentioned earlier or cost of acquisition of that right not mentioned earlier will still be liable to capital gain, and the cost of acquisition will be taken as nil. Clear, sir? Clear? This is 55 amendment which they have done. Next change, sir. Next change is section 56 subsection 2 clause 7b. Section 56 subsection 2 clause 7b. We told that if you issue shares of unlisted company, a company which public are not interested, if the shares are issued for more than book value, more than face value, then it cannot be more than the market value. I'm clear, sir? If you issue for more than market value, the difference between the issue price and the market value will become taxable in the hands of the company. So everyone was supposed to issue shares under 11 UA1 price. 11 UA2, sorry. 11 UA2 rule. 11 UA2 rule, you could value the price and then issue the share. Okay, sir. But it was written that if the shares are issued to resident, then it cannot be more than the fair market value. If you issue for more than fair market value, difference between the issue price and the market value will be considered as income of the company. But it was written resident. As regards non-resident, nothing was mentioned. As per FAMA rules, Sanjay ji, non-resident, you can't issue share to non-resident and less than the market value. You can't issue for less than the market value. But there was no restriction for issuing share for more than the market value. So it's all the good. If you are getting more money from abroad, all the good. What is the problem? If the share is worth, if I get for 10 rupees share, 500 rupees for non-resident, I'm most welcome. So FAMA rule was this. But they realized that some money laundering is being done in this case also. So now they have, omitted the word resident from 5627B, meaning thereby whether shares are issued by closely held company to resident or non-resident. The pre-issue price cannot be more than the fair market value relevant UA rule. And if you issue for more than that, so that is non-resident are also covered under that. Some point of 56 to 13 I've already done, so I'm proceeding. It's because I have to talk about 80 section. Chapter 6A deduction. Now, not to those who are under new regime. Even not allowed to the companies who are paying tax at 22%. They are not allowed to the companies etc., who are under new regime. But person other than who are opting for old regime or who are paying tax can donate money under 80G and claim deduction. Modi ji realized there are
So again, I think so some connection issue.
Yeah, some disruption.
Subclause 3C omitted.
Guruji, कुछ signal गड़बड़ हो रहा है. There is some problem in the signal.
Are you okay? I don't know. My mind is okay.
Now it's okay.
Piyush is also saying is okay. So what I'm trying to say, suddenly they said these have been omitted. Meaning hereby, if you are claiming deduction under 80G, if you are eligible, then deduction to Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation will not be allowed on or after 1/4/2023. 90% is no way, but Modi hai to mumkin hai. He can do anything. I don't know what to say anything. Because Parliament did not realize what is section 80G, subsection 2A or 2IA, 3AB, 3C. But they are no more covered now. They will not be allowed. Coming to now, regime, new regime and old regime. Till last year, that means up to 31st March 23, financial year gone. Up to 31st March 23, if you wanted to go for new regime, you have to apply for it. Am I right, sir? You have to apply for new regime. You have to opt for new regime. Otherwise, you were by default under the old regime. This was the law. That was given under section 115 BAC subsection 1. And they were told that you will be given the new rate of income tax will be on first 2,50,000 nil, next 2,50,000 5%, next 2,50,000 10%, next 2,50,000 15%, next 2,50,000 20%, next 2,50,000 20% 25%, and above 50 lakh 30%. This was, you had to apply for new regime. Now they have changed the whole scenario. They have inserted under section 115 BAC subsection 1 capital A. And 1 capital said, notwithstanding anything contained in any other provision of the Income Tax Act, in case of an individual or HUF or AOP or BOI other than cooperative society or artificial juridical person, the income tax payable shall be, if certain conditions are given under 115 BAC subsection 2 are satisfied, shall be the as under. First 3 lakh nil, next 3 lakh 5%, next 3 lakh 10%, next 3 lakh 15%, next 3 lakh 20%, and above 15 lakh 30%. And they have given an additional benefit of 37,500 beside the benefit which were there earlier in the new regime. But now please note, new regime is by default. Meaning thereby, if you do not opt for old regime under section 115 BAC subsection 6, you will be automatically in the, by default, you will be in the new regime. By default, you will be in the new regime. It has been told to the person who are carrying on a business or profession, please note, think over, before you want to opt for old regime. Once you go to the old regime, you will remain in the old regime only. And you will have only one chance in lifetime to come back to new regime. Thereafter, you can't shift. But persons other than who do not have income from business and profession, it has told every year you can exercise the option. That usually the person will exercise the person only when he wants to go to opt old. If I don't want to opt for old, I will be remaining in new regime automatically. But they have given a circular number 4 only 3 days back, that at the time of deducting TDS, how will the employer know that you want to opt for old regime or you want to opt for new, you want to remain in new regime? They have clearly said it will be the duty of the employer to intimate his employee to exercise the option before he deducts the TDS. Please exercise your option whether you want to go to old or new regime. Intimation will be sent by whom? Deductor, employer. Please note there are 2 regimes. Please let us know we have to deduct TDS under which regime you want. If he has said, I want old regime, okay. If he has said, I want new regime, okay. And if he has not answered my question, by default is in the new regime. If intimation sent to him and he does not reply, I am by default in new regime. But if he replies that I want old regime, they will deduct TDS on old regime. Please, it is only for the purpose of TDS, because his exercise of option will be before due date. Individual can exercise the option of going to old regime before the due date. But for the purpose of TDS, how would you know that he will accept? He said, take the letter from him. Later on, he may change, but you will not be responsible for that. He may say, I will go to new regime, I'll go to old regime, but you have to first deduct the TDS. And while deducting the TDS, please intimate the employee that there are 2 regimes. This is, you want to exercise the option, please exercise the option before I deduct the.
Just sir, it's again paused. I think so. There's a network.
Apply, deduct as per the new cost. It is by default. Am I right, sir? Deduct as per the, this is circle number 4, which has come recently. So I wanted to tell you, because our chartered accountant, employer will be asking them, what should we do? It is very clear that for the purpose of TDS, intimation has to be sent to the employee, and if reply should be taken from him, if he does not reply, automatically new regime. But this is only for the purpose of TDS section 192. Otherwise, it is his liberty that whenever he is filing a return, he may opt for old regime or he is by default a new regime. Clear, sir? Clear, sir? This is what has happened. Now, when I was delivering this lecture, the whole department was sitting, the commissioners and above, and it was on the Zoom also. It was physical as well as on Zoom. I said, he said, are you happy with the new regime? I said, sir, if you look, answer me, I will not opt for new regime. He said, why? I said, let you know. But what do you think of the new regime? I said, it is very beneficial, no doubt. I'm not denying that fact. People can go. But the only difficulty is the person, we are by compulsive saving, we are doing saving. And this is because we want deduction. I will get under 80C, 1,50,000. And that's why by hook or by crook, we always save. He said nothing. We have given benefit to you. And young people are saying, no, why you are forcing us to invest in gold, the government scheme? We will take our own decision. I said nothing. He said, how much successful will it be? I said 70% will be in the new regime. He said, very good result. It is very bad result. I said, let me tell you one more thing, why this is more. Because 90% people will forget to go for option. They will not apply. Automatically, they will be in the new scheme. If they don't apply for old, they remain in new. And that's why you'll get a benefit. He said, why will you not apply for old? Why will you go for old regime? I said, in my case, I get one deduction under 80 QQB, author. And author get a deduction of 3 lakh, extra 3 lakh. Don't have to spend. 3 lakh means minimum tax of 90 plus surcharge plus education tax, which is in addition to the benefit of 80C, 80D, 80 TTB. So I will go for old regime, not for that I want to invest in PPF, etc. because I'm getting more benefit. But if 90% cases, people will get benefit under new regime and not in the old regime, unless, because the reason why they went to a new regime by default, usually let me tell you, they said 60% receipt of the HRA are bogus. 60% receipt of the HRA, employees are getting HRA, they are showing receipt, bogus fake receipts are given, and they are getting the exemption of HRA. And second, people are donating. Sanjay ji, people are donating, but getting the money back. You know, एक कबीर दास का दोहा है, चिड़िया चोट पर ले गई नदी ना घटे और नीर, दान दिए धन ना घटे कह गए भक्त कबीर. दान दिए धन ना घटे, संजय जी कह गए भक्त कबीर. वो भक्त कबीर बड़े विजुलाइज कर रहे थे. संजय शर्मा जी भी बैठे हुए एडवोकेट, मैं देख रहा हूं उनको. उन्होंने क्या कहा, दान दिए धन ना घटे कह गए भक्त कबीर. और दान दिया और पैसे वापस ले लिए, धन कहां घटा, और साथ में टैक्स का भी एडवांटेज ले लिया. ये तो डबल एडवांटेज हो गया ना. तो कबीर दास कितने विजन था उनका. देखिए कब कबीर दास ने दोहा लिखा था, दान दिए चिड़िया चोट पर ले गई नदी ना घटे और नीर. मैं उसको देख नहीं रहा. संजय जी, दान दिए धन ना घटे कह गए भक्त कबीर. और हमारे यहाँ तो सैलरी वाले सबसे ज्यादा दान देते हैं. दान ही सैलरी वाले देते, जिनका पैसे ही नहीं है वो दान बहुत देते. देते क्या है, वो जो पैसे वापस ले लेंगे, कुछ पैसा बच जाएगा. यही होता है, यही होता है. तो भैया ये मेरा पॉइंट मैं पहले बता दूं, ये भी चला जाएगा न्यू रिजीम में. तो एटीजी है ही नहीं, न्यू रिजीम में तो एटीजी है ही नहीं है. कईयों ने तो पॉलिटिकल पार्टी को भी दान दिया है. आपको पता ही है कितने केस खुल गए संजय जी. पॉलिटिकल पार्टी के 17, 18, 18, 19 दे हैव रिसीव्ड क्या, डोनेशन. हैव दे एक्चुअली रिसीव्ड डोनेशन? दान दिए धन ना कटे कह गए भक्त कबीर. उनका भी यही काम था. इसलिए मैं बोल रहा हूं कि अब ये कंसेप्ट उनके बारे में सब कुछ पता है. अपने आप को मत करिए, और न्यू रिजीम बेटर है. ये बहुत ही, अगर जेन्युइन रेंट दे रहे हैं, जेन्युइन हाउसिंग लोन है फॉर योर, then तो you can go under old regime, but otherwise they are aware what is happening. And please, in these days, digital, every information is available with them. Don't take any chances. Tell your clients, don't take any. The next point which I told them, sir, very important. I said, you have given a rebate under 87A. Chayuji, rebate under 87A is maximum 25,000 rupees. On 7 lakh rupees, rebate is, tax is 25. And you get a rebate of 25, you don't pay tax at all. So they said we have raised the limit from 5 lakh to 7 lakh in case of new regime. For old regime, it is 5 lakh, 12,500. I said, very good. But suppose somebody has income of 7 lakh 1,000. What will happen? He will not get any rebate. Am I right, sir? 7 lakh 1,000. Then how much tax will I have to pay? 25,000 on 7 lakh. On 1,100 rupees, 25,100 plus 4, 26,004. I told them this. Suppose he has earned 7 lakh 10,000. He doesn't have any up to let go claim exemption or give 7 lakh 10,000. How much tax? 25 on 7 lakh, on 10,000, 2,000, 20, on 10,000 on 10%, 1,000, 26 plus 4%, 27,040. Sir, you are earning 10,000 and paying tax 27 to 40. Who will do it? There was no marginal relief. Now, government has come with the amendment because of that point which I told them. But that amendment also is only that if your income is more than 7 lakh, the tax cannot be more than the additional income above 7 lakh. Suppose my income is 7 lakh 10,000. So tax comes to 27,000, but my tax will be 10,000. Because they said whatever is the additional income, tax cannot be more than that. Suppose my income is 720. If I calculate the tax comes to, without education tax, the tax comes to on 27,000. I will have to pay only 20,000. Relief. But please note, not full relief. Because 20,000 tax I will pay, but 4% so I will have to pay education tax. So earning 20,000, we will pay 20,800. You earn extra 20, pay to the government 20,800. You come under extra 10,000, pay to government 10,400. 10,400. 20,008, because the relief is only of the tax and not of the education tax. So my income is above 7 lakh, 10,000 only. Relief is 10. Relief is no tax above 10,000. Okay, 10. But please, education tax 4%, 10,400. Education tax 20, other 20 to 20,800. Clear, sir? Now, still something is better than nothing, because even in the case of surcharge, this type of a relief is there. Here also, they have given a relief only in the government amendment. It was not there earlier. When the question was raised, they then gave this relief, but not to the full extent, but whatever they have given. Okay. Now, sir, we have a section called 115 BAB, a company, manufacturing company, where the tax rate is 15%. Manufacturing company, if they are established after such and such date. Now, the cooperative society was also saying, sir, we also are manufacturing cooperative society. We should also be given a benefit of 15%. We are being charged 22% tax. Give us the benefit. So they have brought one section, 115 BAE, stating that you will be also charged 15% if all the conditions given under same condition of 15 BAB have been introduced in BAE. If you satisfy those conditions and you establish your cooperative society on or after 1/4/23, but by 31st March 24, will give you the benefit of tax at the rate of 15% instead of 22%. So this is 115 BAE, which is there. Now, Piyush is also very young, not that old. And I don't know whether he's playing or not. People are going for online games. Online game. You see all young boys, young girls are playing online games.
कल बंद हो गई सर वो.
हाँ?
कल बंद कर दी इन्होंने.
क्या?
मोबाइल पे बंद कर दी.
ओ यार बंद कर दी. डिफरेंट ऑनलाइन गेम तो है ना. Now online game, people were making money, but they were not paying tax on that. Now they have said, please note, if you go for an online game, you will be the person responsible for making payment of online game will be under an obligation to deduct tax at the rate of 30%. A new section inserted, 194BA, and no threshold. Sir, no threshold. Even 100 rupees one, they will deduct 30% tax. Even 100 rupees you earn, they will deduct 30% tax under online game. 1 point. Second point, 115 BBJ has been introduced. That is new section, that the tax rate on online game will be 30%. TDS also 30. It will be 30% plus surcharge plus education cess. No exemption in the online game of 2,50,000. No question. Even lottery, when you have a lottery crossover is not there. Now another change, 115 94B and 194 BB. You know, there was a threshold limit of 10,000. And they were saying that for each transaction, it is 10,000. Now they have said, look here, person responsible for making payment of winning of lottery has to calculate aggregate amount in a year. It should be, if it is more than 10,000, you have to deduct tax. It is not per transaction, per winning, it is per aggregate amount. This is 194 BB and 194 B for 194 BB for horse race and 194 B for has been changed. Coming to now some TDS provision. Sir, 192A they had written that if you withdraw money from Provident Fund within a period of 5 years, and if you don't provide a PAN, you will be liable for TDS of 30%, maximum margin rate. But there are many employees who may not be having PAN because their salary may be more or less than the exemption limit. So they are not having, they said this is too high. Now they have said if they don't provide PAN, normal provision of 206 AB, the maximum rate will be 20% under 192A instead of 30%. In 194.3 last year, they had said if the securities are in demat form, if the securities are in demat form, you are not required to deduct TDS because we already have information of demat form securities. So there is no need. Now they've gone back. They say even the securities are in demat form, TDS will have to be deducted at the rate of 10%. So they have withdrawn that clause 9 under 194 A3, 193, the clause 9 has been removed. Now that proviso has been removed. So now even if the securities are demat form, TDS will have to be deducted on the interest which you have to pay on the securities as the same like other securities. Next change, sir. I have already told you about online game 194BA introduced, 194BB introduced, and 194 and withdrawal. When you have withdrawal more than 1 crore, you have to pay TDS and all that. You have to deduct TDS. Banks are supposed to do it. But in the case of cooperatives, they are having a lot of money coming in the cash or so. They say for them it is 3 crore instead of 1 crore limit. That they have done. Next point is there is nothing much. 206 is CC. The maximum amount which they have to deduct if the PAN is not provided cannot be more than 20%. So the most important point, I know you are looking to the watch that you have in half an hour to ask the question. So okay, sir. At one point, in 269 SS and 269 T, you know that any loan borrowing cannot be more than 20,000 without account paid check or account paid draft, and the repayment of the loan, etc., cannot be more than 20,000. But for cooperative society, this limit has been raised to 2 lakh. Limit has been raised to 2 lakh. Only for cooperatives. Next point is very, very important. Sir, Piyush, what used to happen is that suppose you are rendering services to the government. You are a contractor of the government. In the case of government, you know that there is a single entry system. Most of the government now are converting into double entry, but many central government is under single entry. Now what happens is, suppose I do some contract to the government for 2 crore rupees. I have to show my income on 2 crore in the current year because of mercantile system of accounting. But government deduct TDS at the time of payment and not at the time of credit because they don't have a system of credit. The TDS was deducted at the time of payment, not at the time of credit to the account of the SSC, because they were following mercantile. I was following mercantile system. They are following cash system. The government is not having a mercantile system. So the TDS was deducted. Now suppose I have shown my income today. TDS has not been deducted. I have paid tax on that. On 2 crore my tax, let's say the income was 40 lakh. I have paid tax on 40 lakh. Now government has made me payment after 1 year or maybe 2 years. And he have deducted the TDS on 2 crore rupees, 2%, 40 lakh. Now in my 26 AS of the subsequent year, or maybe in the second year, will be TDS deducted by the central government 40 lakh and revenue 2 crore. Now mismatch. I have already showed my income and 2 years back. Now this year they have deducted the TDS. They will say, why this income? Where you have shown this income? And there is a TDS. Why should we give you the benefit of that? Now 155 subsection 20 has been brought in, saying that if your TDS been deducted in a subsequent year and you have already shown income in an earlier year, you can make an application to the AO under section 155 subsection 20, giving all the details that TDS was, I have already paid tax on this income 2 years back. TDS is deducted now. I need not show my revenue, and kindly rectify by assessment order and give me a refund of 40 lakh, which is be deducted after 2 years. You have to make this application within 6 months of the end of the year in which the deduction was made by the central government. Meaning thereby, now you will not be put into difficulty. You have already paid tax on that income, and now you are noticing my TDS has been deducted. That income has already been shown. Go to 155.20, read with 154. The AO will rectify the order of assessment and give you the refund which is due to you. Clear, sir? This is a very, very important amendment which has taken place. Institute might have also given this pre-budget memorandum. Most of the time, Institute gives it, but some are accepted, some are not accepted. That is a different story altogether. And very, very interesting, sir. Sir, Piyushji, I'm really surprised. We have section 115A, subsection 1, clause B, where the payment of royalty or fee for technical services paid to non-resident, the tax deductible at source was 10%. Sir, this was the 10% in tax rate, not TDS rate, 10%. And you could deduct the TDS and nothing. Whereas in foreign country, the treaties, there will be 15% rate also, 20% rate also. But in some cases, it is 10%. But we used to deduct as TDS. And 90%, Sanjay ji, most of the cases, we have to deduct TDS from our own pocket. They say, we are nothing doing. We are giving you you have to pay 5 crore to us. I have nothing to do. If the tax is there, you pay the tax. So we used to gross up. Am I right, sir? We used to gross up and pay. Now the rate of tax under 115A, subsection 1, clause B, has been raised from 10% to 20%. This is a government amendment on royalty and fee for technical services. Now it is 20, sir. Now you will have to compare it with the treaties. If the treaty rate is less, then take the benefit of treaty. If the treaty rate is not less, you have to pay 20%. And 90% time we'll have to pay from our own pocket. You know that. We have to gross up and pay for that. And that's why I'm really, at one time, I remember about 7 years back, this rate from 10% was raised to 25%. That time I was in the institute and we had given a post-budget memorandum and they had brought down from 25 to 10, giving the same explanation. But I'm really surprised. Now 10 has been raised to 20 and you will have to go for DTEA and take the certificate also from them and then deduct the TDS at the DT rate or 20%, whichever beneficial to you. Clear, sir? This is one. And one more thing. If a dividend you are receiving from a unit of an international financial center in India, from a company, that TDS, that income tax rate will be 10%. They have reduced it to 10%. 10 instead of the 20% under 115 AIA, it is 10%. That is the benefit, of course, given. And you know that the period of time barred for completion of assessment under 153(1) and 1A was 9 months. Am I right, sir? 9 months from the end of the assessment year, they realized that it is very difficult to do that. It's now 9 months has been increased to 12 months, both for updated return as well as for your normal return. The completion of assessment will have to be done 12 months from the end of the relevant assessment year. Clear, sir? Clear, sir? And one more. If your case is pending and there is a search, etc., then in that case, commencement of a period of completion will not be 12 months, it will be 24 months. 24 months that they have done. So we have some other few more small changes, but since you have a lot of questions with you, I leave it to the Piyushji to ask those questions. Thank you very much for the patient hearing, sir.
Thank you.
One more, sir. One more. That is liberalized remittance scheme.
Yeah.
We had given them the memorandum. Slightly 20% rate is too high. Slightly it is too high. Earlier it was 5%. Now for tour package or for any other purpose, if you send money abroad under liberalized rate scheme, except for education and medical, the rate is 20%. Too high a rate. Suppose I want to make a gift. My daughter is in US. I want to make a gift of, let's say, 1 crore to my daughter. Although I'm not aging. I said, let me give a gift to her. That gift to her is exempt, no doubt, because she's my relative. But I will have to deposit 20 lakh rupees on the TCS, and then I'll have to go and run about the pillar and post to get a refund of 20 lakh. There's too much a high figure. But they have not agreed to that request. The 206C 1G, they have clearly mentioned it will be 20% for package tour, for any other purpose, without limit of 7 lakh, 20%. So that I want to tell you. Now you can take up, sir.
Thank you, sir. Thank you, sir. A lot of questions, 200 plus questions. I tried to consolidate it. 200 plus, it's running 250, 260 now. But perennially, sir, you told that on amendments in charitable trust, if we can.
Sorry.
Because majority questions are on that. So it automatically will be answered.
Sorry, sir. Sorry. So I should have finished my 15 minutes earlier. Doesn't matter.
No problem, sir. We have time, sir. People are
we
very
can extend.
anxious. People
Coming,
remain anxious to hear you.
Sir, coming. Now, first, sir.
We can extend till 6:30, no, without any issue. You can continue, sir.
Okay, sir. Now, first amendment. You know, the amendment came for corpus fund. It was told that voluntary contribution with a corpus fund, a voluntary contribution or with a specific direction that it will form part of corpus is exempt, provided it is invested or deposited in a mode given under 11.5. This law came 2 years back, that whatever voluntary contribution you receive with a specific direction in corpus, either under 1023C or 1112, it will be totally exempt, provided the amount is invested in mode given under 11.5. And then it was said that, look here, if you want to use money, corpus, any application out of the corpus is not application. Don't worry. The amount which you spent out of the corpus is not an application. But suppose you want to withdraw from corpus and use it for some purpose. Then if you refill the corpus, if a subsequent year you have withdrawn 1 crore rupees from the corpus, you have withdrawn this year 1 crore rupees from the corpus. This year it is not an application. Next year, if you refund this, refill the whole 1 crore, it will be treated as application. If you refill the corpus, suppose I refill the corpus with 25 lakh, 25 will be application of the next year. The next year I refill with 40 lakh, it will be 40 lakh will be the. So any application out of the corpus is not an application. But in a subsequent year, if there is excess, if you have a money, you can refill your corpus and treat it as application. Refill corpus, whatever you have withdrawn, refill it. Now they realize that one point that the people may refill after 10 years, 15 years. How will we treat the record? Now they have really said that if you have withdrawn any amount from the corpus, refill the corpus within a period of 5 years. If you pay back after 5 years, it will not be treated as application of after 5 years. Up to 5, suppose you have withdrawn 1 crore. Up to 5 years, you have paid back 70 lakh. 30 is still not given back. So 70 up to which year, whatever you have done, that will be application. The balance 30 lakh which you have given after 5 years will not be treated as application. Second point, whatever is the corpus as on 1st April 21, whatever is the balance of corpus as on 1st April 21, please note, it cannot be treated as application. That is not allowed for refilling. That corpus fund or 154.1 will not be allowed. You use that. I have no problem. You want to use corpus of 21, do it, but it will not be application. You say, I will refill it. No question. Refill is only of that corpus money which has been received after 1/4/21. Whatever received up to 31st March 21, kindly note, even if you apply that and you want to refill, you have to pay back to the corpus. Not allowed. Not allowed. And secondly, whenever using from the corpus, you have to see certain conditions must be satisfied. You should not violate those conditions. The condition is that you should not have given that money for corpus donation to other. The condition is no violation of TDS, no violation of 48(3). The condition is this money cannot be treated as, cannot be used for a personal benefit given under 13(3). There are 5 conditions given. You have to satisfy those conditions. Similar treatment has been given for loan. Whatever loan up to 31st March 21, that will not touch. But if you have received loan on or after 1st April 31, please note, loan is not an income. Loan is not an income. And if you have used that loan for asset purchase, kindly note it is not application. When will it be treated as application? When the loan is refunded and the interest is also paid. That time, when the loan is refunded, you will treat it as an application. I give you an example. Suppose I have bought a property for 3 crore. I took loan of 2 crore and 1 crore was in my bank. So 2 crore loan I have applied and I have taken the purchase of property 3 crore. Kindly note, Sanjay ji, 3 crore is not an application. Application is only 1 crore, which is your 2 crore is there as a loan, and loan is not an income. So anything which is not an income, you apply it. Now this 2 crore, if you refund within a period of 5 years, we will treat as application. Accountancy is different from income tax. So that whenever refund is given back, when the loan is repaid, we'll give you the application. But again, the condition imposed is the loan should be refunded within a period of 5 years. Sir, it is very difficult. We had given them, suppose I took a loan, a term loan for buying of a property. And from a bank, when you take a property, 10 years, 15-year term loan you have taken, they say it will not be treated as application unless you refund that money within a period of 5 years. We had given representation. Nobody has bothered to listen. I can't help it. Even in the loan case, private loan, I have no problem. If you have taken a private loan, pay within 5 years, otherwise it will not be application. But if you have taken a loan from banks, PUG, and it is for term loan, and term loan is for 15 years, how can I refund in 5 years' time? They say refund in 5 years, then only application. Whatever you refund in 5-year application, whatever you refund after that, not an application. And whatever loan you have taken before 21, that will never be treated as application. They were said. So people might have taken a loan earlier and not treated as application. That also will not be allowed. So this is one. Now earlier, suppose, sir, you have to file, Sanjay ji, you have, if you want to accumulate more than 15%, Section 11(2) says, and even proviso under 1023 says, you have to fill up a form number 10 on or before the due date mentioned under 139(1). Law is this. But they changed last year that 10B form or 10BB form has to be filed at least 1 month before the due date. That means by 30th September. So 10B, 10BB has to be filed by 30th September. And in the audit report, you have to mention that he has accumulated fund 11.2 and invested in 11.5. How will you mention that? Because due date of filing form 10 was due date of return. Now better sense has prevailed, and they have said that form 10 and form 9A will have to be filed at least 2 months before the due date. 2 months before. That means 31st August. Sanjay ji, this is applicable from this year only. By 31st August, you have to file form 10 online, form 9A online. Failing which, you will not be given a benefit of accumulation of more than 15% or giving explanation under 11(1) that apply next year or apply in the year in which I receive it. So please be careful. Form 9A, form 10, which are filed electronically, should be filed at least 2 months before the due date. 2 months before the due date will be 31st of August. Clear, sir? Next point. Sir, you have gone for renewal of your registration. You have got a regular registration. And now you want to say, let me not apply for renewal after 5 years. Let me not apply. Let us forget about it. Mind it. If you don't apply for renewal after 5 years, whatever is the time, with minimum 6 before, you don't apply for renewal, Section 115 TD will be attracted. As if you have converted into a non-exempt one, and all the current liability, market value of the asset minus liability, you will be liable to pay tax on 30% if you don't apply for renewal. People don't apply for renewal. They said this will be, you will be liable for tax at the rate of 130% under Section 115 TD on the accredited income. Accredited income is fair market value of all assets minus the liability. This is also a very important point. Let me tell you, people are trying to show that let us not apply. Who will come to know that your registration, it will be treated as cancer. And the moment it happens, you will have to pay tax under 115 TD on the entire value of the current value of the asset minus liability at the rate of 30%. This is the another point. Now, earlier, any new trust was given what you call temporary, provisional registration or provisional approval. Now the question is, if you have given a provisional registration and if you have commenced the charitable activity, you have to again apply for regular registration within a period of 6 months. And that was putting a problem. Now they have said no more provisional registration. If you have already commenced the charitable activity, kindly apply for regular registration. You will be given provisional registration only when you have not started the commercial activity, charitable activity. Take provisional registration, but the moment you start your commercial charitable activity, within 6 months apply for regular registration. But if your trust is already commenced the activity, please, you will be given regular registration 5 years and not the provisional registration at all. That point is also being changed. So these are the major points where the change has taken place. Earlier, 2 years back, lot of changes were there in the charitable trust and in section 1023C. Correct, sir? This is it. Now you can ask.
Thank you very much, sir. Thank you very much. As I said, there were many questions. It ranges 200 to 250. I have tried to consolidate on section wise. Because we have started with charitable trusts, I believe there was amendment as regard to claim of section 11, which is connected with filing of return. And now there is a bar that if there is an updated return file 139.8A will not be considered for purpose of exemption. So does it means earlier, even if I was filing an updated return when it came, exemption would have been available. So if I am not filed under 104, I directly file.
A mistake was committed by them, and they said that you can file a return under this section.
Sir, you are on mute, sir.
Without mentioning anything, now they have said 139.1 and 139.4. 139.8A not allowed. And this has been done from the date when this updated return has come. So no question. You will not get the benefit of exemption under 11A by filing a updated return, because that could be done only under 139.1 and 139.4. One advantage, belated return, you are going to get the benefit of exemption. Earlier, it was not allowed. You had to file your return on or before the due date. Now, even you file with belated return, you can take the benefit of section 11, 12, even 1023C. So that is the advantage which is there, but not for 139.8A updated return.
Right, sir. Right, sir. So 139.8A, there is no benefit now available from the exemption.
You have to pay extra income. No question of exemption.
Right. Okay, sir. Sir, now coming to another section 55, sir, that nil cost, which has, I believe, has come wherein they have said any other rights. Now,
any other right or any other intangible asset?
Any intangible assets. Now, one of our participants is asking whether alimony received at the time of divorce, whether that would be also covered in this, or that remains a capital receipt.
Sir. You are talking about a right. Right. That right, of course, is first point is that is under capital gain, no doubt. Right. Now, where is the right to claim? Where is the right? It is a court decision. When alimony is given, it is a court decision. And there have been judgment when alimony is given at the time of court, there is no question of any tax. But here he says, where is the right? The right is that you have a right to ask for. I don't want to say under Muslim. There may be a right to claim for meher. Because they enter into agreement. Am I right, sir? I don't know about in case of Muslim, they have to enter into an agreement for giving meher. And if there is a divorce or whatever is it, they may be having a right for that. But in our Hindu's case, there is nothing like that, that you will be having a right of claiming this partition. It is only when you go to the court of law and court of law decide the alimony, or if the alimony is given under compromise also. According to me, it was not a right. According to me, it is not a right. And so far, alimony has not been taxed earlier.
So alimony continues as it is, as whatever.
And alimony may not be taken as an asset also, sir. It is not an asset. Where it is an asset? Under capital gain, there is an asset. Right is, if right is an asset, intangible, the name is intangible asset. It is not an asset. And right is right an asset of this nature? I don't think so.
Okay, sir. Sir, again connected to section 55 itself. This nil cost is for all the rights which are self-generated. Now there is certain rights arising because of change in law, statute provision. Let's take an example. I have a land wherein FSI has suddenly increased. Building is already constructed since 30 years and FSI has increased. So I can demolish that building and now instead of 1,000 square feet, I can build 2,000 square feet. So that 1,000 square feet was getting exempted because it was a nil cost of acquisition.
Cost of improvement, it was.
It was called cost of improvement. Now, what happens to this after Section 55 amendment, basically?
The first thing is cost of improvement, which you are taking.
Hmm.
Here, the scrap value of the old building was supposed to be deducted.
Hmm.
Because when you are demolishing the old building, there is a scrap also which comes. And the scrap also is part of that, you have to deduct from the cost, the scrap value. And then only you have to take it into that. That is based on the judgments which were given. That is based on the judgment which were given.
Right.
Where is the question? This is not an intangible asset. First thing, this is not an intangible asset. You are coming to the right now. You are coming any other right. Now, the any other right, I don't think the department had in this matter had thought of that doing. You are talking about TDR.
Yes.
You are talking about TDR, which is exempt in the mostly TDR is the case of Maharashtra. Basically, there are TDRs and TDR judgments are there. TDR is not allowed. But now the question is this possible? We'll have to think over that this becomes a right of TDR and may become taxable under section. This may become taxable. Correct. If it is self-generated.
Right, sir. Thank you, sir. Sir, now coming to another question is in regard to 56(2) subclause 7B, wherein non-resident have been included.
Pardon me again?
56 subclause 2, subclause 7B.
Yeah.
Wherein only it was applicable to resident assessees. Now it is applicable to non-resident investor also. And your sir also explained, you have explained that there is also a FEMA. So now there is a difference in the law. So FEMA says you should not issue the shares below 100 rupees if my 100 is a fair value. And income tax say you should not issue above 100 rupees. So how you come to a situation? If I issue at 99.
First thing point is under 56(2)(7)(b), it cannot be less than the face value.
Right.
That's already there. The issue cannot be less than the face value.
Hmm.
It is more than face value, cannot be more than the market value.
Correct.
That is the only point now. Face value is already there.
Right.
It is not there. Now FEMA says you cannot get less, but the FEMA you have to apply for it. You have to apply FEMA, but it can be more. But here it is cannot be more. So here you are on a level playing field that you are not trying to take. The question was money laundering. People were taking money outside, then getting the money from invested from non-resident and taking it that it is received as a premium. Now, to avoid that, they have brought it. But otherwise, where is the problem? FEMA said not less than the market value. Am I say? So please, income tax does not talk about that. Income tax does not talk about that. But whenever you have to see other laws also. Otherwise, if you are not committing, you may be it should get face value here. But already said by FEMA, not less than market value. So you will have to follow the law also. That is also central government law. You will have to follow that. So that's why they say, why should we come out with that? It is already FEMA is going to come out with that. So we have no problem. So they have not used the word that.
So other connected to that, under 56(2)(7)(b, if the investor was venture capital or AIF,
that is there. That is already there. No change. No change.
But we have a lot of foreign funds which are venture capital, but not
Venture
registered
capital
in
also
India.
there is no change, sir.
No, but sir, they are not registered in India. They are registered in Mauritius, Dubai. But they are venture capital registered or fund registered. Can I get exemption for that?
I think they have not changed that explanation.
No change.
Nothing has been touched. There will be no problem in there. Absolutely no problem.
Right.
And startups are already exempted.
Right, sir. Thank you, sir. Sir, now, of course, I'm going from below section wise. So coming to the favorite section 54F again, sir. You have already clarified that 54 is poor property. So if I sell 3 residential flats and earn a capital gain of 10 crore on each, I buy 3 flats on 10 crores. Very well, sir. Very well, sir. Now coming to sub 54F, sir. the limit of deduction is not 10 crores. It's a consideration. That is the net consideration which is invested would be considered as 10 crores. That's what is to be clarified. That's a question we'll raise, sir.
Correct, correct.
So if I always get a deduction proportionate to my 10 crores investment. Even if I invest 30 crores, my investment of capital gain will be considered.
Numerator cannot be more than 10. Denominator will be net consideration.
Sir, now very specific query, sir. Very specific query. I purchased a house in an installments where I have to pay 10 crores per annum. I buy a house of 50 crores. Over a period of 5 years, I will be paying 10 crores each. Every year, 10 crores each installment.
Have you taken the possession of the house? The asset should have been taken within 2 years or 3 years.
So
The rest is loan. I am not concerned. Price is fixed. When the possession is given, is the price fixed. You may sell it on credit, you may sell it on installment. Income does have nothing to do with it.
right. Sir, question was this, just for again a clarification, sir. If in between a 3 years period, which is the time limit permissible for the capital gains.
Purchase is 2 years.
Yes, 2 years, sir. So if I invest 10 crores in 1 year and 10 crores in the second year, so of the financial year, and I get capital gains from sale of shares in 2 different years. So I'm been within 12 years, whether I'll get that benefit for same flat.
No, sir. You have to deposit the money under capital gain scheme.
Right, sir.
If you want to claim a benefit, you have to deposit the money under capital gain scheme.
Right.
So whatever the money which you want to take a benefit within 2 years, either spend the money before the due date of return or deposit the money under capital gain scheme. And the maximum amount which can be deposited under capital gain scheme is also 10 crore benefit. So therefore, no problem. You make the payment in 2 years. How does it matter? Have you deposited in the capital gain scheme and take out from the capital gain scheme and give it to him?
Right.
So there is no problem. There's absolutely no problem. Capital gain scheme is there.
Right, sir. Sir, another question is again, you had given an example coming on section 1010D of insurance. Sir, आपने एक example दिया था तो एक specific question आया उसके ऊपर. आपने 2 lakhs and 1.5 lakh का दिया था. 2 lakhs existing policy and 1.5 applicant. So the last policy of 1.5 lakhs would be taxable. Because of that, it's going above 5.
Because of that, the premium has gone up.
So of course, it sounds funny, but my member wants to know whether I can claim proportionate amount because 5 crores तक exempt है, 5.5 हो रहा है, तो 1.5 crore की पॉलिसी का 1 crore claim करूँ क्या?
नहीं सर, नहीं ऐसा नहीं, मैं बताता हूँ. उन्होंने बड़ा क्लियर किया हुआ है. Even in ULIP also they had made it clear that they had given a guidance note and they have clarified it. Look here, number of policy up to 5 lakh. Suppose you have taken policy of 2 to 1, I have no problem. But if you have taken a policy of 2 plus 1.5, so the moment you take 1.5, that year the premium will be 550. Otherwise, it should have been 4. They said we will give benefit of 2 policies which are less than 5. But this, due to this policy, it has crossed 5. We will not give for this policy. It has crossed 5, so we will not give. You could have taken 1 crore and then you take any other. We have no problem. But if the amount of the policy is 150 premium of one policy, you were clear that it should not have been more than 1 lakh. Why did you give more than that amount? They will not give the benefit of 1 lakh thereafter when the payment is received. No, it is the policy wise, not the amount wise. It is policy wise. Number of policies, that's important. You see the provider, they have 7th proviso. 6th proviso is 1 policy, 7th proviso is more than 1 policy. 7th proviso. And that is very clearly said only for those policies where the premium do not exceed 5 lakh will be allowed benefit, but policy where the premium, that policy will not be allowed. They have made it very clearly. If you have act before you, you can see explanation 7.10.10D. It's very clear they have mentioned.
Right, sir. Sir, then there is a question in regard to 43 capital B MSMEs. More not actually not related to tax impact, but more related to audit. How would I actually, sir, what was happening when I had to make a disclosure in the company? People used to give sometimes a note that the company has not called for details that whether the supplier is an MSME or not. Now, this is a specific deduction to be reported in tax audit, for an example. How would I do it? If I do not get response from the
duty of the buyer to inform, please let us know whether you are registered under SME or what you call what is the first price? That means small and medium enterprise. I'm not talking about medium. I'm a tiny, micro or small enterprise. You have to write to them that please let us know whether you are registered under that or not. If they replied yes, they have to provide you registration certificate. If they don't reply, it is better to write to them. We had given you that letter, communicated that you have not responded to that. We presume that you are not registered under the SME. The matter is over. We presume. They will keep on presuming. They will not. They will tell them don't reply to us, and we will presume it. So presume, and then there is no problem. You have a documentary proof that you intimated to them to provide you registration certificate. In spite of that, if they did not do it, then you again wrote a letter to them that please note that you have not provided. We presume that you are not covered under that. Your matter is over. If the management is able to show that, it's okay.
Sir, connected to the, let's take an example of chartered accountants itself, which one member has raised. My audit fees is provided in the books of accounts. It's not due on 31st March. So obviously they do not pay.
But that problem is still there. That problem is still there. You have not rendered the service.
Right.
So it is provided there. How can you say that it is due? That point is still there. I wanted them to give the clarification. They said they might give you clarification very soon. They have not provided in the law. I told them 31st March they have provided for their audit fee. But we have not rendered services. Service will be rendered later on. And when the services are rendered, they will make the payment to us from the rendering of the service. The bill is submitted. I have not submitted any bill. I have not submitted any bill. So according to them, then when you submit the bill, 15 days will be counted from there, or 45 days will be counted from there. But they should give the clarification, which you may expect in due course of time.
Okay. So one more connected to again this, just to clarify, if the supplier is applying capital expenditure, then also 43B will continue as it is, irrespective.
I would say point is that the section 43B says when you have claimed this as a deduction. Read the top line. When it has been claimed as deduction. So you have not claimed this as deduction.
I have capitalized it.
You have capitalized it. This is not your expense. So according to me, it should not come.
Okay.
I will read out. I have an act before me.
Yes, sir.
Let me read out 43B. 43B top lines I will read. Just ask for the
certain deductions. Certain deductions.
It is written 43B, notwithstanding anything contained in any other provision of this act, a deduction otherwise allowable under this act. So deduction is not allowable under this act. So according to me, it should not come. But now you say depreciation is allowable. That is the suppose you have taken a land, then where is the depreciation allowable? That point is a gray area, but otherwise it is not, deduction is not allowed.
Right. I think so. This is
claimed under 30 to 37. Yes, depreciation is also one of the deduction. So gray area may be there that you have claimed deduction. That should not be allowed. But I can't. But that is not the idea behind that. Rather, we had said that, sir, this is draconian law. What are you doing? But I don't. They have not understood anything.
Sir, now coming to TDS, which is always TDS, sir. Section 194, this LRS deduction, which is now gone to 20%, sir. Sometimes, sir, remittance happens.
This is TCS.
TCS, sorry, sir. TCS, sir. I'm sorry. Sometimes it's happening that I'm remitting to my own account, sir. From my own account over here to the own account over there. I have an account and I am a resident. That's why I'm using LRS.
Let me tell you the history why this law came.
Right, sir.
You know, 2-3 years when the liberalization came, the data was collected and it was told 70% of the people who have remitted the money abroad under LRS, they were not filing any return of income also. And crores of rupees they sent it. There was no check. And they had taken a passport. You know, at that time, remittance was done through the passport copy. They had taken a passport at a particular place. Then they changed their address. But it did not intimate anything. The letter used to go to that place where they said a person not available. So people were making fool of the people. They were sending money abroad and they have not filed return of income. So they wanted to check. I said, if you are checking, even 5% is very high. Why are you interested? I said, why have you kept 20%? He says, still those persons who will not file return, we will at least get 20. This is the answer. We'll at least get 20%. So why at the cost of those dishonest people, the honest people are going to suffer and they have to pay 20% for remittance abroad? I can't say, but this is what they are thinking. At one time, they used to listen to me. These days, nobody listens to me. And nobody listens to anyone.
So-
Even institute, they don't listen. Why should I me? Even the institute also, they were representing so many things. They said nothing doing.
So remittance from my own account to other account, TCS will be deducted.
Any other 20% purpose is not any other case. The word uses in any other case. First case was education. Now medical is also there. Then for package tour, the last is any other. It comes under any other. It comes under any other. You have to file 15C, 15D, right, or 15CB, whatever is it. So it is going to be 20%.
Right. So there was some confusion in 194BA regarding, because TDS on this gaming TDS, TDS has to be deducted, I believe what was on net winning. So
It's already there.
Achha,
It is already there.
okay, it's on net winning only, not
Net way, next.
next. Right. Sir, any clarification on the taxation of the amount in regard to PF withdrawals? Any contribution about 2 lakh, though it was not pertaining to this Finance Act, sir. But there's a lot of theories have come on that, sir. If you can throw light, if the contribution is about 2,50,000, then there is some taxability at the time of withdrawal.
Sir, if the contribution is more than 2,50,000,
Right.
they are saying that we will tax it. Interest part will be taxed every year. And they have given a formula that on the basis of that formula, whatever interest is credited to your account above 2,50,000, that is going to be taxed every year as your perquisite. That is, the formula is already there. That formula holds good. Every year you will have to calculate how much is the interest on that amount. There is interest on interest also, na? That amount will that formula is already there, and you will have to work out on the basis of that formula. They have not changed the formula.
Sir, there is one more question, but I don't know whether that is correct also, that question. He is saying that this 5 lakhs for the premium on 1010D, whether GST is to be included. I don't know whether GST has been levied also. Because
That
it's
nothing
pure
is mentioned, but GST is not. The first thing is, in life insurance, is there GST?
on a risk portion, small amount is there. I think.
That will be excluded. Okay.
It should be excluded because on a very small, supposing I'm paying.
They will
1
give
lakh
the
premium, it would be on
clarification.
10,000.
Other also circular, they have given GST to be excluded. They will give. The time is there. They will give you. They will give you.
Right, sir. Right. Sir, one, but another last, I think, sir, on MLDs. This is on whether there are certain unlisted MLDs also. Now, this is only to a listed or MLD or all MLDs, basically. Listed MLDs or unlisted?
Unit of mutual fund you are talking about. Unit of
Yes.
specified mutual fund you are talking
Market linked debentures, sir. Market linked debentures. Market linked debentures, MLD.
Market linked debentures, they have been defined in the Act,
Right, sir.
in the Finance Act. So
Right.
you will have to read the definition. I can't remember the definition in our
Right, sir.
market linked debentures have been defined. And
Okay.
if they fall under that definition, you have to treat it as a short-term capital asset. That's all.
Sir, while reading, it does not talks about listed or unlisted. But when the speech was given, it was saying because the listed entities are getting benefit of 10%, listed securities, whereas unlisted were anyways paying at 20%. That's why there was some confusion what your is to say.
While even unlisted, let me tell you, even unlisted after 3 years, it is long term. Indexation benefit is not there, agreed. But in any case, it is there. In the case of debentures, interest is taxable every year.
Right.
Interest of debenture is taxable every year. It is only the premium or debenture which is the capital gain. Otherwise,
Right.
interest is taxed. But market linked debenture case, interest is variable. It has nothing to do with the coupon rate. There is no coupon rate in the case of market linked debenture. In the case of normal debenture, it was what you call interest. And they were talking about capital gain only when they are talking about securities. That 10% is regarding securities. Debenture is also security, bond is also in a security, no doubt. But my point is, if it is a security of the nature where interest part coupon rate has nothing to do. Whenever the coupon rate is less and they give it at a premium, that was treated as a capital gain. Because you know that indexation of debenture is not allowed. Bonds and debenture indexation not allowed. So the capital gain will be normally only on the premium part, nothing else. Premium on redemption. Premium on redemption is the capital gain. Where is the otherwise capital gain in debentures?
Sir, I'll take one more last question, sir. It's a TDS to be deducted by the employer. So I am giving a declaration. If I don't give a declaration, they will deduct under the new regime, which is the default regime. Or I give a declaration that you do it. Can I change this declaration? And can employer readjust the TDS in the last 2-3 installments?
Sir, they have said he has intimated, read circular 4. They have not said change up. They have said he will have to intimate whether it's going for old or new. Whatever you have done, let it do it. He says, this is not, it is only meant for TDS, but you have a full right to change at the time of filing a return. You can't change the TDS, but at the time of filing the return, you have applied for old, you want to go to new, go to new. You want to go to old, go to old. But TDS obligation of the employer says, I cannot keep on doing it every day. Let him inform me. Once he has informed, no question of change of option. Let him think properly. No question of change of option. Nowhere it is mentioned in circular. Nowhere. This circular has come only yesterday, 5th April. 5th April evening it came.
Right.
Circular. People have not seen the circular. Please let them see the circular 192. This is very clearly mentioned. If you want, I can read out the circular also if you want.
No, sir.
Let me take out the circular.
Right, sir.
1 minute, sir. Now, the circular says, in order to avoid genuine rate carry in such cases, the board in exercise of power under 119 hereby directs that a deductor being an employer shall seek information from each of the employee having income under section 192 regarding their intended tax regime, and each such employee shall intimate the same to the deductor being his employer regarding his intended regime for each year, and upon intimation, deductor shall compute his total income and deduct tax thereon according to the option exercised. If intimation is not made by the employee, it shall be presumed that the employee continues to be in the default tax regime and has not exercised the option to opt out to the norm rate. Accordingly, in such a case, the employer shall deduct tax on income under 115 BAC. कहीं ने लिखा है that it is clarified that intimation would not amount to exercise the option under 115 BAC 6. That means so therefore nowhere written that if the option can be changed. Nothing is written there. Nothing is written. According to me, option once given cannot be changed. You can do it while you are filing return of income. You cannot ask the employer to change it, but at filing return of income, you take your decision. Whether you want in old, apply for that. If you don't want to be old, you are in new regime. And each year is a separate year. Each year is a separate year. That's all.
Thank you, sir. Thank you, sir. I have tried to consolidate whatever queries were coming. Of course, there are so many queries. There are queries other than Finance Act 2023 also, which I am not trying to touch up, but for a wonderful session. Sanjay bhai, you would like to come in, sir?
I would not have said no, but the time is not permitting.
I appreciate
I would not have said no to any query on income tax, but they keep on asking me, they keep on ringing me.
Yes, sir.
There's absolute no problem.
Yes, sir. Sanjay bhai, you would like to come in, sir? Before we had a formal vote of thanks. Please, Sanjay bhai.
I would like to just say to the viewers, since this is from the issued forum, sometime we are giving the answers of the query. These should not be considered as the issued view. So this is a word of caution, because this recording will be available on records, and it will also be available on DLH portal, where we are going to preserve it for eternity as on today. So this is just an disclosure I am making as a Directors Committee Chairman. Over to Piyush Bhai. Raj Chawla ji, if wanted to add something, we can ask him also.
No,
Yes.
thank you. गुरु जी से कुछ पूछना तो हमारे लिए
Sir, you have a full right to ask me.
नहीं सर, ये सर आप you explain so beautifully that everything is clear to all, sir. Thank you very much, sir, for sparing your valuable time.
Thank you very much, Girish Ahuja sir. We are extremely overwhelmed with
But
your.
yes, I'm really impressed by the PUC, the type of questions he has asked. Really, he knows ins and out of the income tax. I didn't know, but he knows income tax.
सर जैसे हमारे
And I can assure you, I can assure you, he knows everything.
he is very expert, sir. I know him.
I didn't know, sir. I met him only few days back. I didn't know that he's an expert in income tax, but really he's done a good job. Very good question, sir.
Sir, thank you, sir. Thank you, sir. Sir, vote of thanks is my duty. Thank you for giving me thanks, sir. Thank you very much, Girish Ahuja sir. It's always very pleasant to listen to you. And sir, your energy, your anxiety on the subject is marvelous. Sir, there are 300 plus questions there were there. Last 2 hours when I was listening to you, मैं उसको बना के consolidate ही कर रहा था कि इसको कैसे consolidate करूँ section wise. That shows the people's interest. And you will not believe, sir, when you were speaking, people were so attentive that their immediate questions were coming. Sir, as I told you an example of proportionate 1.5 lakhs. So जैसे ही आप बोले 1.5 lakhs ऐसा होगा, उनका question आ गया. This shows the people's attention. This generally does not happen in such webinars. But I know when Girish Ahuja sir is there, it has to be there. So it's very much thank you, sir, on behalf of Institute, on behalf of Direct Tax Committee, on behalf of all the participants, to very much thank you for giving your time and been available always for the Institute and for Direct Tax Committee. Chairman, sir, thank you very much for giving me this opportunity. Raj Bhai Chawla, very thank you much for being over here for all the time, and all other council members and the co-opted members who were there available on the screen. The team of Direct Tax Committee who had arranged this program in a short time, and to get hold of Ahuja Saab at the right moment of time when the Finance Act has just passed. And I thank all the participants for their wonderful session by way of raising some questions. Thank you very much. Thank you.
Just to add, we have
Yes, sir.
just to add, now we have around 9,000 participants today. So that's
That
a big
speaks of the
number.
volume.
Yeah, it speaks of the volume. Thank you, sir. Thank you very
Sir,
much.
Ahuja sir,
Thank you.
9,000, sir.
God bless you. Take care. Stay healthy. Thank you. Thank
So
you, sir.
control room, please conclude the proceedings.
Thank you, sir.